Good morning and welcome to BloombergQuint, India's first digital live streaming business news service. I'm Neeraj Shah and you're watching Indian Open. Let's go straight to the headlines. The US House of Congress impeaches Donald Trump on abuse of power charges. The trial moves to the Senate. The GST Council votes for the first time to tax lotteries at a uniform rate of 28%. Little else could be discussed as state finance ministers seek a review of the entire GST system. Cyrus Mistry's counsel tells BloombergQuint that he is legally entitled to attend Tata Sons' next board meeting, even as the group says it is going to seek legal recourse against the NCLAT order. Patanjali is the new owner of Ruchi Soya as the Baba Ramdev Bat Company pays the lenders. Prohibitory orders have been imposed in Bengaluru and Mangaluru in the backdrop of protests against the Citizenship Amendment Act. The orders in Bangalore will be in place till the midnight of December 21st. Well, the world markets are a mixed lot, you would have to say. The US markets ended a bit lower, but if you looked at the US futures, they almost shrugged off the impeachment. This is what the close was, but the Dow futures suggest a mixed bag of trade as well. However, the rest of the Asian pack is stepping back a little bit. And mind you, to my mind, this is not in reaction to Donald Trump getting impeached. This will have been just another regular day because the Asian markets have had a fairly decent run the last few days and some bit of a pullback at the start of the trading day could well be warranted. We're seeing that in the SGX Nifty as well. So that is something that you got to monitor in the session today. So that's what the world market setup is. But remember, as I said, the US markets ended flat yesterday. The futures for now seem to be shrugging off the impeachment. But since that is the biggest news, let's just talk about that first. For all of you who just joined in and don't quite know what's happened, Donald Trump has just become the third US president to be impeached by the US Congress. The House, which is controlled by the Democrats, have found him guilty on both the charges. Jody Schneider of Bloomberg News explains what happens from here on.
It's a historic day, obviously. This is only the third president in U.S. history to be impeached, even though President Trump, we saw him on TV just now saying it's all partisan, it's a game, it's a witch hunt. This occurred after an extensive investigation and committees, weeks of witnesses being brought. It really does show that they brought a case about the president basically abusing his power. They proved their case, at least to the House of Representatives. It was on a partisan basis, but they did prove their case. They impeached the President of the United States. This is significant. Now, of course, we turn to the Senate, where the Senate would need 2/3 of all the senators to vote. They act as the jury in this process, and that is highly, highly unlikely to happen.
Yeah, and I think if you heard what all of the speakers mentioned post this decision happening as well, as the trial moves to the Senate, I think doubts have been expressed about whether or not this will result in impeachment. I think the Bloomberg article suggests that can he be removed from office? Possible, but unlikely. Or you can look at it under unlikely, but possible. So, we don't know what will happen next, but because the Republicans hold the majority, seems to be unlikely that he will be removed from office. However, this is big news. Only the third US president in the history to be impeached. And that was our attempt to try and give you a sense of what this means. However, as I said, the world markets haven't really reacted too much to this piece of news. What about our markets? I think the last few days have been pretty interesting. And the more important thing is that when we look at the last few days, large financial names are starting to outperform on days which are trending higher. Day before yesterday was a trending day. Yesterday, we were flat for better part of the day and then inched higher. And you can see why this is happening. This is courtesy what's happening to large financial names. HDFC Bank yesterday eclipsed the 7 lakh crore market cap mark as well and ending at life highs. HDFC the last few days has been in life highs. So we're seeing large financial names starting to outperform on days when the markets are trending higher. And frankly, if we just look at the nature of the stocks which are moving, these three names, Bajaj Finance, a lot of these underperforming names which are starting to move back on the large cap end, seems to suggest that it's foreign ETF money which is starting to find allocation. This is not necessarily bottom-up value hunting, but more ETF money. That seems to be the color of the money that is coming in right now. We're not questioning that. Money is money, whichever shape and form it comes in. And it has been coming in because yesterday too we saw very large FI buy number, 1800 crores versus, I mean, dwarfing the 1200 crores or negating the impact of the 1200 crores that the DI sold. Day before yesterday, FIs bought in 1200 crores, DI sold in about 800 crores. So while the domestic pullback might be happening, the foreign money is starting to fund in a big way, come in a big way, and that is actually a very good sign. 3,000 crores in 2 days is not something that we've been used to in the recent past. So it's just my assumption that this is essentially ETF money that would be coming in. What does this do to stocks? I think we'll watch out for financials for sure, no doubt about that. Just 2 or 3 newsmakers first before I talk about the broad trend. Firstly, NMDC, they received the approval for modified mining plan of the Kumaraswamy iron ore mines as well, from 7 MTPA to 10 MTPA from the Indian Bureau of Mines. Seems that the last few days are all just set for NMDC. They're getting approvals very, very briskly, and it should only augur well for the stock. Do watch out for this one today as well. Goa Carbon, they've said that they're going to commence protections at the Paradip unit, which is in Odisha, from December 20th. It was shut for maintenance work, so this could provide a bit of wing to the stock. The Rallis analyst meet was pretty interesting because they reaffirmed recovery in the demand environment during the Rabi season amidst the higher sowing and reservoir levels. Remember, a couple of brokerage notes had come out which had said that the demand environment during the Rabi season might move higher. Motilal Oswal, economists, pointed that out as well. Rallis in their analyst meet are reconfirming that too. Not just for Rallis, but for a lot of companies which depend on this, should be positive pieces of news. Couple of interesting brokerage notes on Chennai Petro. UBS has cut the target on the stock to 200 from 370. They've lowered the FY 2021 refining margin assumptions, but they remain optimistic on the 2020 upside in the IMO division. So do watch out for that. And JSPL, despite all the headwinds, Morgan Stanley has gone ahead and raised the target to 174 from 139 rupees per share. They believe that JSPL will grow faster than the market as the domestic steel spreads will improve. Well, let's wait and watch if JSPL recovers. Mind you, despite that verdict or despite that losing out on the Gare Palma mine, JSPL has actually recovered very, very smartly. Went down to 133, back to 146. Should be interesting. My just last thing that I want to say, I would watch out for what's happened to the Tata Group stocks in today's session as well. Historic decision yesterday may not have an immediate bearing on what happens within Bombay House in terms of decision making, but Tata Global Beverages, Tata Coffee, Tata Steel, Tata Motors, all of these stocks would remain in focus in today's session as well. So those are a set of names that you should monitor. However, let's tell you what's lined up on First Word today. Nikunj Ohri first lists out the decisions taken in the 38th GST Council meeting. Patanjali pays up for Ruchi Soya, Vishwanath Nair reports. NMDC receives an extension for 4 mines in Chhattisgarh. Nikki Mirchandani will tell us about that and what else is working for the miner. And sugar stocks are in a sweet spot. Yash Upadhyay will explain why. It's for the first time since its inception that the GST Council voted on a proposal, and it was to bring lotteries under a uniform rate. Nikunj Ohri reports on that and the other decisions that were made out in the 38th GST Council meeting.
The GST Council has voted for the first time since its inception to have a uniform rate for state-run and state-authorized lotteries. This uniform GST rate has been decided at 28% and will be effective from March 1, 2020. Remember, earlier state-run lotteries were taxed at 12%, while state-authorized lotteries, meaning those lotteries that are run by private players, were taxed at 28%. Now, both these lotteries, state-run and state-operated lotteries, will be taxed at 28%. Besides this, the GST Council was also briefed about the revenue position that current GST revenue position by committee of officers that was constituted to augment GST revenues, and the committee has given a representation on various ways through which voluntary compliance under the GST regime can be bettered or improved, ways through which tax base under the GST regime can be increased, and measures to improve return filing under the GST regime. Now, these measures come at a time when GST revenues are on a decline and compensation to states is increasing, which has led to deferment of compensation payments to the state governments by the center government. Now, there were strong comments made by some of the finance ministers who called deferment of the GST compensation to states as good as a debt default by the central government, and the finance minister on this has commented that the central government is committed to compensate states for any losses that they incur in first 5 years of the GST's implementation. Besides this, although there were no major rate cuts or rate hikes announced in the GST Council meeting, there was a small tinkering done where long-term leasing of industrial and financial infrastructure plots owned 20% or more by state or the central government will be exempt from GST. Earlier, this criteria was that central or state government should own 50% or more in such plots to be able to exempt from GST. Another important decision taken by the GST Council is to restrict input tax credit to 10% of the eligible credit for businesses if their invoices have been uploaded by their suppliers. Remember, last month the government had amended rules to restrict input tax credit to 20% of the eligible credit, and now this has been further restricted to 10%. This has been done to block or avoid fraudulent input tax credit claims by certain businesses. Besides this, there are two other announcements that the GST Council has made today. It has waived the late filing fee for GSTR1 returns for returns filed from July 2017 to November 2019, and if these returns are filed by January 10, 2020, the late fee on these returns will be waived. Besides this, the annual return GSTR9 and GSTR9C for financial year 2017-18, the last date for filing these annual returns has been extended to January 31st, 2020 from December 31st, 2019.
Okay, so well, you would argue at the end of it, you would say much ado about nothing. A lot was anticipated. Not much came out of the 38th GST Council meet. Well, maybe the future meets will throw up some more decisions. Moving on, Patanjali is the new owner of Ruchi Soya. The Baba Ramdev-backed company, which had sought some time to pay up on Monday, has transferred the amount. Vishwanath Nair has this report.
Baba Ramdev's Patanjali Ayurved has finally taken over Ruchi Soya's assets under the insolvency and bankruptcy proceedings. According to what sources are telling BloombergQuint, Patanjali Ayurveda paid about 4,111 crore to the financial creditors of Ruchi Soya, led by State Bank of India. State Bank of India, which had made claims about 1,800 crore, is set to get about 880 odd crore as part of this transaction. Some of the other lenders are also taking a significant haircut on their outstanding dues. Now, remember that the total claims by the financial creditors was close to about 9,300 odd crore. So the difference or the haircut that the lenders are going to take is close to 56% in this case. However, this is still one of the large resolutions that have taken place under the Insolvency and Bankruptcy Code just this week, right after ArcelorMittal took over SR Seal on Monday. Now, on Monday as well, Patanjali Ayurveda had actually approached the NCLAT, the National Company Law Appellate Tribunal, to seek more time to complete this transaction with Ruchi Soya. The idea was that they would have deposited the funds into an escrow account controlled by State Bank of India. However, the distribution of funds would take a little more time. By Tuesday, the NCLAT had actually given them 7 days to complete the transaction. However, Patanjali has managed to finish that by Wednesday. And now what we understand from our sources is that Ruchi Soya will be transferred to Patanjali Ayurved. The assets will be officially transferred to Patanjali Ayurved on Thursday after a big board meeting that will take place in the company.
Well, so one more sum has come in. It's not a large one compared to what SR gave, but or rather what was got for SR by ArcelorMittal. But nevertheless, resolutions should only please the street. We don't have the PSU banks really making a big headway compared to the private ones in the recent past, in the last 3 or 4 days. But you never know. All of these could only keep a bit of a floor to the stock prices of some of these banks as well, the likes of SBI in particular. But moving on, metals have something's going for them, and NMDC certainly does, because it's just received an extension from the Chhattisgarh government for 4 iron ore mines in the state. A palpable boost for the miner. But that's not the only reason why the companies managed to outperform the Nifty Metal Index this year. Nikki Michindar is here to tell us what else has worked in the miners' favor this year. Well, Nikki, let's talk about the year. I mean, if I talk about the last 3 or 4 days, there's been a bunch of good news. But how's the year been?
Year has been rather splendid for NMDC. It's been raining positives for NMDC for the last 3 to 4 days as a whole. But even for the year, it's been a good ride for the company. If you look at the Nifty Metal performance out there, on YTD basis, you're seeing NMDC rally as much as 23% for the entire year as a whole. And look at the Nifty Metal Index performance. It's down by 15%. Trade concerns, you have the low LME prices, all of them being put together on the metal index. But NMDC rather stood out. Second gainer in the list. Even on month-to-date basis also the company has performed well as compared to that of Nifty Metal Index. It's rather the top, the best performer on the index with gains of around 16% as compared to 2% gains seen by the metal index as a whole. Couple of things that are actually working in the favor of the company, apart from the developments which have happened over the past 2-3 days, as a whole also fundamentally also things have started turning around for NMDC. Let's first look at the probability there of higher international prices, which in turn could percolate down on the better pricing power seen by NMDC. Internationally, if you look at the DCE iron ore prices, they have rallied by a good 7-8% in this last 1 month. And if you were to compare that with the year low prices, I mean, it's been a recovery from the August level that we've seen. Sharp uptick there coming in for the iron ore prices. You also see the possible disruption coming in. Apart from the international iron ore prices, we are also looking at domestic prices uptick there. It's been Odisha miners have been taken a hike. And yesterday when I spoke to JSPL, Mr. Verma, he's the managing director, he said that Roongta miners have actually gone ahead and taken a price hike to an extent of rupees 400 per ton, which is huge. And given the trend, we are also expecting the same price hike coming through for NMDC as a whole right now in this month. Given the international scenario, also the price hike, apart from that, we're looking at a possible disruption coming in the Feb-March 2020 auctions, given that the ministry has made it compulsory for these miners to secure environmental clearance, which means that this will just elongate the production process. Once these winning bidders actually go ahead and secure these mines, they will have to go ahead and first apply for environmental clearance, which looks to be that this could elongate the process by 2-3 years. And the obvious beneficiary to this would be NMDC. Also, what is working in the favor of the company is the amendment which has taken place in MMDR Act back in October, when the ministry notified that any auction coming in, NMDC, upon receipt of an application, the state government may extend the mining lease by 20 years. That has been modified. The word may has been replaced with shall. So it now reads that upon the receipt of an application, the state government shall extend the mining lease by 20 years, which in turn paves the way for the company to secure or rather renew the license coming in from Chhattisgarh as well as Karnataka, and also Donimalai to an extent. It strengthens the case for Donimalai mine altogether. Chhattisgarh government in the last 2 days, as you all would be knowing, that they've actually given that approval right now to NMDC. So that's a big positive for the company, because it's a confirmation of sorts. Also, what has worked in the favor of the company is Kumar Swamy mines. The production limit has been up for that mines, which is also a great positive, given that the mine is highly profitable. And production limit, the plan has been approved from 7 million tons to 10 million tons. So augurs well for the company. Last and not the least is the upcoming steel plan, the valuations of which have not been factored into the target price of NMDC by most of the brokerages around. For that, the company has already secured a coal block there. Initial estimates indicate that this could be a potential gain of around 400 to 500 crore of EBITDA once the coal mine is operational and the steel plant rather secures this coal requirements from this plant. So rather, one more positive for the company. Overall, what brokerages make out of NMDC right now is they're all sounding positive on the counter. JP Morgan goes ahead that they see higher volume and prices in FY21. They also see lower steel production as an overhang, just in case if this trend prolongs. MK Global, on the other hand, says the same point, which the stock price rather has been rallying on based of this, well positioned to supply iron ore during trade war, or for that matter, any crisis which happen in the country. Resolution of Donimalai mines to trigger an earning upgrade. strong street rumor that this might also come through for the company, given the way things are now working in the favor. Just look at the potential, Bloomberg consensus rating for NMDC right now. You have buys at 12 buys as compared to the 19 odd analysts which are covering this counter. Barely any holds and sells. But then the return potential for the counter is just 8% right now. Neeraj, I feel there is a strong case for upgrade for the company. Most of the brokerages have not factored in the steel plant valuation. They have not factored in how this coal block allocation will work in the favor and lead to an EBITDA, additional EBITDA coming for the company. So definitely we're looking for some more potential upside coming in for NMDC. Right?
At least market guests are definitely saying that. Nikki, thanks so much for putting that into perspective. So that's with regards to NMDC. Keep in mind, all these is news, and the talk about the upgrades have come in the conversations that market guests have had with us. Let's see if the sell side does go out and do that. The last piece on First Word is about sugar. The sugar stocks have made some sweet gains over the last 1 month. This comes at a time when sugarcane production is expected to fall as delayed monsoons disrupted the harvest season. But there is also global reasons for the same. Yash Upadhyay and Al Johnson for more. Yash, both global and local factors working for this nice little rally that we're seeing in the sugar names.
Absolutely, Neeraj, you put it right. So we've seen most of these sugar names rally significantly in the last 1 month period. Gains of anywhere between 5 to 18% have been seen for the likes of Balrampur Chini, Dhampur Sugar, Triveni Engineering, and the likes of DCM, Shriram, as well as Dwarikesh Sugar. All of them have seen sweet gains over the last 1 month period, and that is mainly on account of the estimation of a lower sugar production in the ongoing sugar season, which has started from the month of October this year. Now, main reason for this is the extended monsoons that we've seen play out over the months of October as well as November, which has damaged the sugarcane crop in states like Maharashtra as well as Karnataka and Uttar Pradesh, which account for the large chunk of the overall sugar which is produced in the country. Not just that, because of these monsoons, we've seen the crushing season to start at a later date, at least in the state of Maharashtra as well. And Maharashtra has its own problems with respect to farmer protests demanding higher prices for sugarcane, which has resulted in that delay. Now, it is critical to understand why Maharashtra is important for the overall sugar production in the country, because Maharashtra is the second largest sugar producing state after Uttar Pradesh. And take a look at how the production has been as far as the mills' operation is concerned. And we've seen that there has been a substantial enough drop from 178 mills which were operational as of yesterday, last year, so December 15, 2018. We've seen that number drop down to 124 mills, while the rest of the states, Uttar Pradesh as well as Karnataka, have largely remained same. Now, Maharashtra accounts for almost 1/3 of the total sugar produced in the country, and combined with Uttar Pradesh, they produce almost 85% of the 26 million tons which is the total sugar requirement in the country. And because of this delay in crushing season as well as the extended monsoons and farmer protests, the production as of December 15 in the current sugar season has fallen by almost 35%, from 7.5 million tons at the same time last year to a little over 4.5 million tons. Not just that, as you rightly mentioned, there is positive news on the global front as well. We've seen that the sugar production estimate for the ongoing season has gone from a surplus to a deficit, and industry body ISMA believes that the sugar deficit for the current season is expected to be anywhere between 7 to 8 million tons. As a result of this, we've seen international sugar prices rally from the lows of September, and we've seen international sugar prices go up by as much as 15% to almost $13.50 per pound. This will also be positive for the Indian sugar mills, because we are already looking at a huge opening stock from last year, and then the sugar production that would happen in this year as well. So this would not only help divert some of the excess sugar in the domestic market, but would also make exports more viable for the Indian sugar millers, because historically what we've seen is that the international sugar prices haven't been fairly remunerative, because they've been lower to what they have been getting in the Indian market, and this would make it more competitive against the likes of Brazil as well as Australia. As a result of that, we are likely to see the sugar exports to hit a record high this time around. They did close to 3.8 million tons last year, although the government had mandated sugar exports of anywhere between 4.5 to 5 million tons last time around. Now, the reason we have seen the last few days be extremely positive, Neeraj, for the sugar players is that there is this expectation that we are likely to even breach that mark of 6 million tons. And we went out and spoke to sugar mills as well as industry people, and they are saying that these are all at the end of the day just expectation, and we can't really say for sure right now that whether we'll be able to exceed the mark of 6 million tons. So probably we'll have to wait and watch until the end of the sugar season. But right now, because of the expectation of a deficit globally, we could see higher exports coming in as well. But whether we'll achieve it or not, that is something that we'll have to wait and watch. And because of that positive sentiment, most of these sugar names have rallied. Not just that, there is the ethanol factor as well. Two large tenders have been received for which almost 163 crore liters of ethanol has been supplied by most of these sugar mills. And what's interesting over here in this chart is that almost 50% of that has come in from sugar as well as B-heavy molasses. Now, when they produce ethanol from sugarcane as well as B-heavy molasses, what it does is that it reduces the recovery of sugar from the cane, and that reduces the production of sugar simultaneously. So because of that jump, which is almost double of what they've done in the previous season, and expectation of further tenders coming in, we are likely to see more diversion towards ethanol. Brazil has done that for one, and we are seeing that's the reason why the sugar production in Brazil is also expected to drop. The sugar production in Brazil has already got over, and they have seen a lower production because of several reasons. There's dry conditions as well as the diversion to ethanol. So that is another positive for the industry, which is ethanol. Not just that, there have been several measures that the government has taken. Most important of them all, which is what most of the companies as well as the industry has been asking, is the reduction in the sugar cane pricing. We've not seen a reduction come in, but they have remained steady. So both the FRP as well as the MSP, which was just announced a couple of days back by the Uttar Pradesh government, they have retained it at almost 315 rupees per quintal. And FRP prices, we know a couple of months back they came out, they were retained at 275 rupees per quintal. Not just that, they hiked the MSP on sugar as well from 29 rupees to 31 rupees per kilogram.
Which was done a few months back.
Right, as well as the creation of the buffer stock. So there have been multiple positives. The government has been actively trying to support the sugar industry, which is a big positive. But few concerns are also there. One is that the outstanding cane arrears, they stand at almost 5,000 crore rupees. We have seen historically those numbers shoot up to the levels of 27,000, 30,000 crores as well. So if that situation gets worse, that would be a big negative. And the failure to meet this export target of 6 million tons, that would be a big negative, because we'll not be able to divert the excess production, and then we will have sugar prices fall in the domestic market as well. So these are the two big concerns. But overall, right now, there is a lot of positive sentiment.
Yeah, falling sugar prices is may or may not happen, because it will depend on what the government decides to do, right? The government may decide to support, because had it been left to free market forces, we already would have had lower sugar prices. But interesting analysis, and a lot of factors which need to be monitored when you look in the sugar space. But some of them are working for the space right now, and which is why the stocks are doing well. Thanks, Yash, for putting all of that into perspective. That's all that we have on First Word today, but lots more lined up on Indian Open. We talk about the NCLAT order of the Tata mystery hero with Anil Singhvi of ICANN Investment Advisors, markets and macros with Rahul Singh of Tata Mutual Fund, and business outlook with RG Chandramohan of Hatsun Agro Products and Krishna Prasad of Granules India.